Good morning and welcome to the next in a series of webinars on the SASB standards and metrics. I'm Michael Kinslick, the head of the standard setting organization at SASB. I'm here with Gabriella Vozza, the sector analyst for the consumer goods sector, consumption 2 as we call it. We're going to take a quick review of SASB's approach to standard setting. Then I'm going to hand it over to Gabriella to go in more detail on the consumption sector. And then we'll talk a little bit more about the next steps in SASB's standards development process and leave some time for Q&A. And on that note, I'd like to let you get your questions in now. You can do that anytime, and we'll take those at the end. So we start with the pillar of SASB's work, which is the U.S. Supreme Court definition of materiality to a U.S. investor. And just to briefly recap that here, that definition is whether the exclusion of a fact would have affected the total mix of information available to that investor for decision making. It's not a positive framework. It's actually, if that fact is omitted, then that's the set. And these are issues as below that are known to have reasonably likely to have a material impact on financial condition or operating performance going forward. We validate that pillar with our approach to standard setting, which is evidence-based, industry-specific, and market-informed. And what we mean by that is we do deep research, and Gabriella will describe that in a little more detail in a bit. It is industry-specific. We look at the topics and metrics most likely to affect a company on an industry-by-industry basis, and it's market-informed. We take information from both investors and corporations into consideration in our approach to standard setting. And so looking at on the left of this slide around the topics for that materiality determination, we look at whether an issue is of interest to investors, whether it is relevant across an entire industry or is company specific, whether it's actionable, can companies actually manage this issue in their business, and then finally, most critically, what is the potential to affect value creation or existing value in a company? And we take that information, we create standards and metrics that are standardized for implementation both within an industry and across industries. We do try to look at similar topics and issues in a similar way as they affect different industries, but they're not always identical. And the goal is to produce a set of standards for the market that are material, decision useful for investors, and cost effective for companies to implement. I want to stress that these are designed for incorporation into the mandatory public filings that companies produce regularly, the 10K for US issuers, 20F for most foreign issuers, and 40F for Canadian companies, and that these are designed for inclusion in the MD&A section of the corporate financial reports. So briefly, how we approached materiality, we took a wide scattershot approach in identifying initial issues and topics to do further investigation on. So at the top there would have been a broad literature search looking at broad array of documents for topics that showed the most relevance. We then filtered those topics through research and assessment of financial impact. We tried to characterize the nature of that impact. Is it something that affects revenue generation? Is it something that affects operating costs, cost of capital, assets, liabilities? And then we looked to the market for validation. So in our industry working groups and public comment period, we found there was a rough cutting point of about 75% of concordance on these issues that we looked to for maintaining them for inclusion in the initial set of standards and metrics. We found a small number below that we continued to look at as possible emerging topics, but generally if a topic didn't achieve a certain level of shared interest between investors and issuers, we did not move forward on that. And I would say that there was broad agreement on whether a topic was material. There weren't many points where investors thought something was material to a wide degree and issuers didn't. There was fairly good concordance on these things. And then we looked to the financial reports themselves and found that companies are in fact saying something about over 75% of these topics. We'll get a little bit more detail on what they're saying and why we think that the SASB approach would help improve that disclosure, but these topics are being discussed. And then finally, we're in a revision process now of looking at the specific mechanisms of impact across individual companies. And so these, for example, for an apparel company, it might be a certification program that lets their consumers know that the supply chain has some assurances in it and could help them drive their revenue. For many businesses, energy efficiency is an important topic as investors increasingly care about carbon footprint of companies. Labor conditions in the supply chain, we know, can have a significant impact on these publicly facing companies in the consumer sector. We've seen many examples of where failure to maintain good conditions in the supply chain has had a significant impact on business operations and ongoing value creation. And then finally, in an example like in the oil and gas industry, we see the potential for stranded assets as investors start to put a price on the carbon assets in the ground. So now I'm going to hand it over to Gabriella to go into some more detail on the Consumption 2 sector itself.
Thank you, Michael, and good morning, everyone, and thanks for joining the webinar today. I'm the sector analyst for the Consumption 2 sector here at SASB, and I'd like to tell you a little bit more about the work we're doing in Consumption 2 and the industries that are in the sector. So Consumption 2 can also be thought of as consumer goods and retail, and there are 8 industries in this sector. We see 2 subsegments in Consumption 2, so that's the consumer goods manufacturers and the retailers who sell those consumer goods products. To the right here, I have some examples of a few themes that we see in this sector. So at the top, we have energy management and retail. So that's probably not surprising, as we all know retail companies have large amounts of real estate for their stores. We also see data security as an increasingly emerging threat, not just in retail, but especially in this sector. It's an evolving threat for companies as more payments are made with credit cards and online, and cyber criminals have increasingly sophisticated techniques. We also see chemicals and products as an emerging theme here across the consumer goods manufacturers, and this has to do a lot with emerging consumer preferences and awareness about what's in their products, as well as evolving regulation. So next, I'd like to delve a little deeper into what the metrics are in the Consumption 2 sector so that you can visualize the themes that are coming out here. First, I have the 4 retail industries: food retailers, drug retailers, multi-line and specialty retailers, as well as e-commerce. So here at SASB, we focus on the minimum set of topics in an industry that are likely material, and that is what our research and our stakeholder engagement processes have unveiled is likely material in these industries. That's what you're seeing here. So in each column, you can see the disclosure topics identified in the provisional standard, and I've colored in the blue text that pull out the themes so that you can see visually across sectors what's standing out here as themes across the retailers. So like I mentioned, we see energy management and retail and distribution across these retail industries. We also see data security and privacy. Also, human capital is the life force of retail, and we see fair labor practices and employee inclusion and performance here as well. We also have supply chain as a theme. These retailers oftentimes aren't necessarily producing the goods that they sell, so how they're managing their supply chain and sourcing products is key to their performance. So here we have the consumer goods side of the sector. We have apparel, accessories and footwear, building products and furnishings, appliance manufacturing, and toys and sporting goods. And there are 3 main themes here. So we have chemicals and products, like I mentioned before, has to do with customer awareness and also safety and hazards of products, especially in the toys and sporting goods, as well as appliances industry. We have product lifecycle environmental impacts, and that concerns the use phase as well as the end of life of the product, including product efficiency and the materials that are going into these consumer goods. Also, here we also have sourcing and supply chain, which has to do with the raw materials that companies are sourcing and also the labor and environmental impacts on the supply chain and how they're managing supply chain issues and transparency. So this chart shows SASB's analysis on the current state of disclosure by companies in this industry on SASB topics and SEC filings. So that's only 10K and 20F forms. There's no disclosure here from sustainability reports. And to the left of the chart in red, you can see no disclosure moving to the right, you see boilerplate disclosure, industry specific, and then metrics. And we see in the consumption 2 sector specifically that companies are already disclosing on a lot of these topics. In fact, about 70% of the topics that SASB identifies as likely material are already being reported on by companies. So it's proof we didn't make these up. Companies are already acknowledging that these are material topics, but the problem is that disclosure is not effective. So even in the rightmost column in the metrics category, oftentimes there are wildly different metrics between companies that are being reported on. So disclosure is not effective. Companies cannot use these metrics to benchmark against themselves in their performance, and investors cannot use these metrics to compare peer-to-peer and decide which company that they want to invest in based on who is performing well. So zooming into one industry, here I have the multi-line and specialty retailers and distributors industry, and we have 5 topics in this sector. You'll see that disclosure quality varies by topic. So for 3 of our topics, companies are reporting metrics. Energy disclosure in the top column is a fairly common metric that companies track, especially in the retail industry. And companies are tracking this data, and also data security as well, because of the high-profile breaches that we've seen recently has brought attention to this matter, and companies are beginning to report more and more on how they're managing this critical topic. We see diversity is not really being tracked as frequently in 10Ks. I know that companies do put some information on diversity in their CSR reports, but that is not what is being shown here. It's solely disclosure on 10K and 20F forms to investors. So now I'd like to dive a little bit deeper into some examples within the provisional standards to help you visualize what these topics mean. So here we have one topic, labor practices, and we see how this topic can vary between different industries that it shows up in. So I have multi-line and specialty retailers here. That's usually the big box stores you can think of. Also e-commerce, and then food retailers and distributors. So SASB focuses on industry specificity to hone in on what really matters to that industry so that companies can be assessed on what is important to their business specifically. So we see in multi-line here to the left that metrics focus more on wages and labor law violations and hourly wage and risk around minimum wage regulations. In the middle column we have e-commerce, and that is a lot more focused on recruiting and retaining technical talent, so that is reflected in the metrics as well. On the right-hand column, we have food retailers, and in this industry, there is an element of collective bargaining and unionization that we don't see in the other industries. So this is just to provide some color on how we have deliberately focused on industry specificity because of the nuances between industries, and to visualize how that manifests specifically in the metrics. So during our standards development process, we have had a laser-sharp focus on materiality. This is an example of a topic that appears in multiple industries, data security, and I've mentioned it a few times already. So here at SASB, in our standards development process, we've looked for evidence of interest that this topic is likely material, and we've taken stakeholder input very seriously in formation of our standards. So this topic, data security, not surprisingly, received strong support during our first vetting process, which is the industry working group. And there's strong evidence that this topic has financial impact on companies through operational disruption, litigation, government investigations, fines and lawsuits, loss of sales, and reputational damage. The list seems like it goes on and on. This is definitely a critical issue for these companies. And this is an example of the high threshold for the topics that are included in the SASB standards. And we've systematically done this for every topic in the standard, identified evidence of interest as well as evidence of financial impact. And I think having this focus on materiality in a research-driven, rigorous approach helps prove the business case within your companies about these topics. So here we have an example of current disclosure on this very topic of data security. And this is to visualize the actual difference between disclosure quality. I can say it all I want, but this is to show you how metrics are crucial to benchmarking performance within an industry. So to the left here, we have a company that acknowledges the risk of data security and how cyber attacks could damage their reputation and incur additional costs. So they're acknowledging it, but they're not discussing how they're actually performing and preventing data breaches. In the middle here, we have more specific metrics around the cost of the breaches. And to the right, we see SASB's metrics on this topic. And having a comparable set of metrics between companies ensures that every company is reporting on these metrics in the same way. And it allows for accountability because our technical protocol is a disclosure guidance that has line-by-line guidance on each metric and how they should be reported so that you know that your company is reporting it in the same way that your peer companies are. So it really allows for accountability and transparency for benchmarking between companies. So here I have also an example from the apparel industry, switching gears a little bit. One topic in the apparel industry is labor conditions in the supply chain. And it's very well known that apparel industries operate in countries, all different countries, to get their raw materials to sew the garments, and their factories are all over the world. And how they manage this risk of potentially headline incidents happening at their factory is through auditing. So I took a look at what different companies are reporting on auditing and what their performance is on SASB's metrics: percentage of Tier 1 suppliers audited, percentage of suppliers beyond Tier 1 audited, and then percentage conducted by a third-party auditor. And this is what I found. So you can see that all companies are doing audits, as we know. If they do report, it's not apples to apples. So some companies are reporting the percentage, some are reporting the number of facilities, some are reporting the number of audits. And even if our companies are reporting 100% Tier 1 audited, what does that really mean? What is the risk around that? How are you managing it? So also the problem with this data is that companies are often reporting on different years, and they have different definitions of what they say is their tiers within their supply chain. So you can see that there's a communication breakdown between what companies are doing and how they're disclosing their progress to the world. And this is the future that SASB envisions. This is comparable data on companies on this topic. So you can see who are the industry leaders, who are the industry laggards, and you can benchmark yourself. Where are you against your industry peers? And you can see if you are focusing on Tier 1 and you are relatively similar to your peers, and you can focus your time and resources on the areas that you need to be improved. So now I'd like to talk a little bit more about SASB's next steps and what we are doing with the provisional standards. So this year we are taking a deeper look into our provisional standards and proposing revisions based on further research we've done or feedback we've received. So we want to make sure that these standards are as high quality as they can be before they are codified in 2017. So as part of this process, we are re-engaging stakeholders that we previously had conversations with and have participated in our standards development process so that they can provide input on the provisional standards. And we're engaging those that maybe haven't had the opportunity to engage in the process thus far. So we really want to focus in on cost effectiveness of these standards for companies as well as decision usefulness. So can these metrics be incorporated into decision-making process? And this slide shows just one example of the type of change we are soliciting feedback on. So this is the same topic that I just spoke about, labor conditions in the supply chain, and we have a metric on non-conformance rate and corrective actions. But since publishing the provisional standard, we've received some feedback that this issue is extremely complex, and companies have different audit criteria, different relationships with their suppliers, and there's different timelines involved with resolving priority nonconformances. So we are proposing to add more color around that and have a technical note so that companies can provide specific context around supply chain auditing. So this is just one type of example, so one type of change that we are proposing to make the standard, but we welcome all companies to come to the table during this period and provide their input before these standards are codified. So I will hand it over to Michael to talk a little bit more about the next steps in our process.
Thanks so much, Gabriella. And again, I want to ask you all to get your questions in now. We'll be getting to those very shortly. So before I get into the next steps in the process, I want to talk a little bit about the governance of that process. We take openness and transparency and good governance very seriously here at SASB. So our board is going to be appointing an independent standards council body that will have the ultimate authority over the standards themselves. And I, as the head of the standards setting organization, will mostly report to that body in terms of ensuring that the standards and the development process of the standards are following good governance practices. Looking at the lower left portion of this slide, we see a very important part of this process is our communications with issuers, with investors, and other, we call them intermediaries, but third-party experts, folks who know things about corporate governance, who know things about securities law, as well as folks who can speak to the technical content of the standards and metrics themselves, academics, etc. I'd also highlight that our board itself will have a committee that will be responsible for hearing any complaints about violations of due process in the standard setting activities themselves. And so as Gabriella mentioned, for the next 6 months or so, we are going to be continuing this deep consultation process with members of industry, with investors, analysts, and others to test the materiality, decision usefulness, and cost effectiveness of the standards. We want to hear from you very much and make sure that what we are proposing is fit for purpose, nothing that we're missing that should be in the standards, or things that are in there that you think maybe why did we put that in there. These are very important engagement conversations, and we hope to have them with many of you. I want to mention briefly, we recently formed our investor advisory group. This is a body of asset owners, asset managers. We'll be talking more about at our in a couple weeks at our first SASB symposium. But just to point out that there are, there is high-level support in the investment community for better disclosure using the SASB standards and metrics. We also have a community of advisory partners standing willing and ready to help companies engage with the standards themselves and help implement them. And a system of support here at SASB, including technical bulletins around the standards. We have our materiality map that can help individuals look at what topics are specifically material for different industries. We recently launched our SASB Navigator, which provides deep look into the research behind the standards and other tools for them, as well as our education program, the FSA certificate, and a set of resources such as our implementation guide for companies, our engagement guide for investors to speak to companies around these topics, and we will soon be releasing a field guide to the standards that will summarize what's in the standards themselves in an easy-to-digest format. I would like to encourage you to join us December 1st, just a couple weeks away, at our first annual SASB Symposium. We have a great lineup of speakers, experts in corporate governance, in materiality, in the use of sustainability in investment processes. It's really going to be a wonderful event. So with that, we'd like to go to the questions we're looking at. And again, if you have any questions, it's still not too late to get them in, but soon. All right. First question. We've spoken about the topics being industry specific.
Sure.
But are there topics that should be considered material across all industries?
That's a really good question, and thanks for asking. So SASB has taken an industry-specific approach for a reason. We know that sustainability issues manifest within an industry. So what is likely material for a retailer is probably different than a internet company, which maybe focuses more on their data centers, or a mining company which focuses on safety. So SASB's done the work with the participation of the market, of course, to hone in on what these issues are at an industry level.
Great. So here's one. How is SASB accounting for the growth of e-commerce and its related data security implications?
Yes, this is definitely a hot topic, especially with the growth of e-commerce, and more shoppers are buying things online and using credit cards and online payment systems. So it's definitely near and dear to our hearts. So how SASB handles this is through our data security topic that I mentioned before. So we have a couple metrics in that topic, but also, especially in the e-commerce industry, we are seeing this fraud prevention angle pop up more and more. So we are soliciting feedback on how we can measure that in a metric this year. So if you have input that you'd like to provide on this angle of fraud prevention in e-commerce, then we would love to hear it.
Great. Again, on a sort of more specific topic, so why aren't there more environmental footprint metrics in the consumer goods and manufacturing industries?
Yeah, so that's a question I've definitely heard before. And the reason is that oftentimes the impacts lie in the supply chain. So these companies are producing goods in their supply chain, so we don't really see environmental metrics in the direct scope of these companies.
So would you say that those environmental impacts are being captured in other industries?
Yes, definitely.
Okay, great. And so here's one. If a company, or if we're already reporting on the SASB metrics in our CSR, or reporting something that is a SASB metric in our CSR, should we reference that alignment in that document?
Yes, definitely another great question, and one that I hear a lot. So we recognize that companies are already reporting a lot of information in their sustainability report. But the problem is that investors go to the 10K to find their information, and elevating your material sustainability issues to your 10K signifies a higher quality of information, and it signifies that this is material to your business. So that's why we have created these standards specifically for the MD&A section of the 10K.
We just got another question popping in. Great. So someone's asking, once a company provides information on the metric, do we get a score that can be compared against industry averages?
Great question. So SASB is not providing scores. We are simply providing the standards to the marketplace so that companies can report on. If other third-party organizations decide to create scores based on companies disclosing on SASB, that's likely to happen. But SASB is not scoring anyone. We are simply providing the standard.
Great. That's the end of our questions. If anyone has anything else, it would be great. You can contact us afterwards. Otherwise, we'll say that's the end of this webinar on the consumer goods and retail sector. Thank you all for participating, and thanks to Gabriella for sharing such wonderful insights.